investors indeed. I'm Leslie Picker here in Englewood Cliffs. Time for the ETF Edge. Stocks across the board rallying today on the back of G20. And check out consumer discretionary hitting a new all-time high, making it the second best performing sector in the S&P 500 this year, up more than 20%. Joining me now to break this all down, Ann Bartels of Bank of America Merrill Lynch and Dave Nadig of ETF.com. Ann, what is this new high for discretionary telling you about the rally?
Well, despite, all the volatility and trade noise that we've had, consumer confidence has remained very high. And based on the Bank of America credit card data, we've seen consumer spending to remain really strong. So it's not a surprise consumer discretionary is hitting a record all-time high. It's been a leader in the market. And with it hitting a new all-time high, it's confirming the high that we're actually seeing in the market today as well.
Now, Dave, as we look toward the second half of the year, can this rally sustain itself, or do you see the sector being overvalued at these levels?
I don't think it's overvalued. We've seen some incredible earnings. I mean, just McDonald's a few days ago. And almost no matter how you want to play the consumer story, it's clear that consumers are actually more confident in this market than investors are. And so I think there are a number of ways to play this. I think the distinction between whether you're looking at staples or services or discretionary or non-discretionary, those don't matter so much. I think consumer stocks in general are really still poised to keep running.
Ann, as you look at the state of the consumer, do you see any major headwinds that could pose some sort of threat to the rally we're seeing in consumer discretionary?
Not at this point. All of our surveys remain really, really strong, and it's both the high-end and the low-end consumer. So it's the consumer really across the board.
And Dave, how do you see volatility play a role in what's going on with consumer discretionary right now? Is this a steady move to the upside, or should we expect some kind of rough bumps along the way as we head toward the second half of the year?
We should point out that a lot of the bellwether stocks here are big brand names like Amazon or Netflix or Disney, and these are names that can move quite a bit. We don't get the things like Facebook necessarily in these that we get in some of the more techie plays, but there is a lot of tech baked into what we see in consumer discretionary now. So I wouldn't expect this sector to be immune from volatility at all. So if we do get choppy markets, these stocks will move.
And Ann, as we are seeing news come out over the weekend with regard to this trade truce, is consumer discretionary perhaps able to withstand some of the potential impacts of tariffs more than other sectors, especially as it looks like things are now progressing forward?
Well, it's really interesting. The market's hitting an all-time high. Consumer discretionary is all-time high. Tech's an all-time high. And we've been under these trade negotiations for over a year. So leadership is still strong despite some of the headwinds that the market has had, despite the volatility, despite the bear market that we had in the third quarter of last year. I think what people are missing is that earnings growth rate since we've started this whole trade negotiation is up 27%. And consumer discretionary has been a strong sector based on the consumer. Now, what's very interesting about the sector is that Amazon does dominate the sector. It's almost 32% of that sector. But despite that, we continue to see strength.
All right. Good stuff. Thank you, Dave and Ann. And thank you for joining us today.